Good evening. My name is Ryan. We're coming to you live from Virginia Beach, Virginia. Looking to facilitate, strike up a discussion about finances this evening. I've got one of the guys in the chat actually said good riddance to October, never forgotten, pretty much. It was a brutal ride for the stock market, and it's one of those things that I take a very, very careful approach to the stock market, because I'm one of those guys that believes that type of thing can happen at any time. All right. So for you folks, you know, I'm very careful if there's information that I put across and, you know, somebody actually gets excited about entering into the stock market and you end up going through in October, which really isn't typical. It is normal, but it's not typical. It's certainly a rude awakening to step into the stock market and enter into such a violent that can really test that risk tolerance right away. And it's tough, man. It really is. I project, you know, a very, very strong risk tolerance that's been evolved over the last couple of decades for myself. But I'm not going to lie to you. It's not fun to sit there and watch your money go down. And if you were invested in stocks, you know, during October, there wasn't many places that you could hide. There really wasn't. You took some adjustment back on your portfolio, and that's tough to watch. And that's really why I try to forecast the potential for a downturn in the stock market before you even get involved. And that way you can kind of sit back and say, gosh, can I imagine my money taking a 50% haircut? Now, the verdict is out. I don't know what November is going to have in store. I think getting this midterm election behind us is actually going to be kind of a tailwind. But if you guys were paying attention at all, like I was today, I actually got to watch the stock market close. I got off a little bit early, and there was a statement that was released. The president released a statement about about the China trade war today, which actually cut the Dow losses from 300 to 150 within a matter of seconds. And I take that to be that it's kind of a tell a little bit. Because if something breaks loose and this guy is able to negotiate some sort of deal with Xi Jinping, it's going to be a tailwind, and it's going to be a tailwind in a big way. I think the midterms are going to have significantly less impact if what's forecasted is going to happen, and that the House is going to the Democrats, the Republicans retain their majority in the Senate. I actually think that's going to be kind of a neutral point for the stock market. But I have a ton of stuff to talk about this evening. You guys are already kind of firing me up. You guys know that you get a better product if you fire me up and poke the bear. So that's a good thing. Somebody was giving me crap for dumping Apple stock a couple months ago, and I actually didn't. I just reduced my position. I think I had 60 shares at the time, and I reduced it all the way down to 18 shares. I did actually just pick up an extra 10 shares before they reported, thinking that they were actually going to do quite well. I thought the quarter was fantastic, to be honest with you. I'm not sure about their proposed change in how they present data to the shareholders. I'm not really sure why they don't just read like an open book. Honestly, they owe it. I mean, they're the most widely held stock in every ETF, and it really is beneficial to the company. I like to know how many units of iPhones they're selling per quarter. So I do have some channel creators in the group here. I've got Millennial Investing in the group here for the first time, and certainly want to give a shout out. Certainly want to acknowledge those folks who are trying to strike up a discussion, man. So I enjoy you coming in here on your time from the beautiful state of Massachusetts, man. That's really awesome. I appreciate you. Anything we can kind of help to facilitate you growing your channel and your message. You asked me before I kicked in here what I talk about, and I tend to, you know, take a little bit of a casual approach on my live streams. I really think it's important for the community, which was also acknowledged as being really one of the best communities. And I absolutely cannot disagree with that. I feel obligated. You know, the last couple months I've been getting settled into a new location. We started this channel in New York City which evidently is where Officer Towers is this evening, if I'm understanding that correctly. I wish I was there. Very powerful city, man. Very cool. If you guys have never been there, I highly recommend going and checking it out. It's pretty awesome. But welcome to you. If there's anything that we can do, certainly. I'm all about fostering a community dialogue. There are certain channels that I support. There's other channels that I do not support. I don't. I've watched the YouTube landscape change for the good and also for the worst over the last couple of years. I really have. And if there's any sweet justice in the world, we've got Ryan Scribner kind of going on 300,000 subscribers, and couldn't ask for a better advocate carrying the flame forward for new investors. Just released a new video. I posted it in my Facebook group. The man threw down on a 50-minute video. I thought it was fantastic. An absolutely great piece of offering through YouTube, free of charge, really walking through 10 principles if you're a new investor. He must know something strategically as to why he came out with a project like that, because I know Ryan pretty well, and if he didn't break it up into 10 segments, which he absolutely could have done, took a strategic risk, I thought. Took a little bit of a creative risk and putting a 50-minute content out there, and I hope it goes really well for him. But if there's any justice at all, I started following Ryan Scribner when he had about 6,000 subscribers. And actually, the first video that I ever watched of him was actually when he lost a friend of his. It had nothing to do with investing whatsoever. And the sincerity that came through in that message, honestly, I knew he made stock market videos, but hadn't caught a lot of his content. That actually happened to be, and I told him this in person when I actually had the pleasure of meeting him. And since then, I've met him a couple times, but you know, just kind of validated for me where the guy was coming from. And I think at the end of the day, when we're looking to strike up a discussion on YouTube about finances, I think you can hear a lot of different opinions on YouTube, and that is part of my disappointment on YouTube, honestly. I think there's a lot of folks out there, and I came out with a video this week about growth versus income, and I got responded to for the first time. I typically don't respond on the financial education channel. He actually responded to me this week and asked for my input on a particular comment that I had made on his channel. Gave a very articulate response, and of course didn't get responded back. But my comment was aimed at being constructive, no doubt, in that I feel like so many creators out there do for a while and practice a certain way of investing, and that just happens to be the type of investing that they recommend to new investors. So it's one of those things to where when you're talking about the stock market holistically, and you've got somebody talking to you about ETFs and index funds and the benefits that exist therein, and you've got dividend investing, and you've got single stock investing, you've got growth stocks, you've got the potential to buy into emerging markets, you've got the potential to buy abroad. You know, has anybody looked into the Japanese stock market this week? It's pretty attractive, right? So across the landscape of so many different options, I think it's really irresponsible to look at the investing landscape and say, you know what, I only want to invest in growth because I only want to seek that alpha compared to the broader market. I think you're really missing out. I'd love new investors to really look at the landscape holistically. If they have questions about a certain advantage or disadvantage to a certain segment of the stock market, seek out the answers to those questions, all right? But don't sell yourself short in just looking at one perspective and saying, you know what, dividend investing sounds good to me. I don't know a whole lot about it, but it sounds good to me. This is what I'm going to do exclusively. I think that can be a really big mistake. I think you can have different pillars within a portfolio. I talk all the time about, you know, a portfolio doesn't have to just be built upon one pillar. And that's why a lot of people listen to me and they're like, okay, well, I'm a passive investor in one particular pillar of my portfolio, and then I trade particular stock as well. And I always give you guys the updates of my stock additions, my subtractions from this particular week. my major position that I took this week, actually, and I know, I think one of the people in the group here actually brought it back to my attention. It was a stock that I have owned for quite some time, on and off, but I hadn't owned it for at least 3 or 4 months here, and that is BlackRock. I went ahead and took a 10-share position in BlackRock. It had just got way too oversold, as they are levered to the stock market. So when the stock market does suffer, it really took a haircut. And I felt like the entry that I got on it, I was sub 400, got into the stock, and I think we got a really good entry into the stock. If you guys had kind of taken me up on my advice to take a look at Estee Lauder, I took a short position in Estee Lauder this week. It ran up 10%. I took my profit today. So just for you guys to know, I probably sold too soon. But you guys have to kind of understand my thought process right now is I'm not trying to get too cute on this stock market. If you guys think that this week we're all clear, I'm going to tell you, I don't think that that is wise to approach the stock market based on the last week's activity. Me personally, I'm just about as confused as I was at the week start as I won. But we are entering into a new month. That helps. We are saying goodbye and rest in peace to October. That one will never be forgotten. There were some brutal days there. But I do have a ton to talk about tonight. I am absolutely fired up. And as long as Obstinate has got the beer going on, don't spill it, all right? We can kind of get going. I do want to focus on the group here. So I do try to really interact here. The other channel creator that I've got in here, who will absolutely be called out on my 10,000 subscriber video, that if the world doesn't come to an end, we should be achieving the 10,000 subscriber milestone mark, which it's funny for me to say that. It really is. I am humbled at that. But Brent Metters, it runs the financial investor channel. He's been with the channel since the beginning, no doubt about it. And there's probably going to be 5 people that I speak about. Brent will be a little bit different in what I appreciate about his contribution to the discussion. And, you know, if I were kind of going to go out on a limb and say this, Brent's kind of in line with what my mission is. And that is the measure of his success as mine will be measured by the amount of people that listen to the information and say, wow, you know, I never thought about investing. I just listened to this guy or gal, and they just motivated me to start investing where they may not have done so had they not come across that particular channel. So I've got 2 channel creators in the group here. Brent with the finance, he'll help me facilitate this discussion as well, and the millennial investing, man. It's good to have you guys. I'm humbled that you want to come in and spend some time striking up a dialogue about finances, no doubt about it, man. So let me get to this group here and see if I can't strike up some dialogue here a little bit. I'm gonna take a quick scroll here. We've got a great group in here tonight, and I've got quite an agenda to get to. And if I went through the script straight through, I'd probably go for 3 hours. And I don't want to scare anybody off of this live stream, but you guys know how aggressive and devoted I am to you guys. 1979 Wood is in the house, man. It's a wonderful community we have on this channel. It's something that I'm going to speak a little bit more in depth about on this particular live feed. But I can't stress enough. I've always built this channel to be predicated on the success of the individual investors we empower to hear a message about direct connecting yourself to the stock market through self-directed investing. All right. It's something that I've done for the last 7 years, and I'm really just trying to share this as an alternative. So if you guys are kind of new to the message, I don't get on here and just talk about dividend stocks, man. I wouldn't even run a channel if that was my niche, so-called. All right. I'm not looking to waste my time in being redundant in what I feel. If you are at all a steward of the stock market or a student of the stock market, it's something that is very easy to understand. And I don't think it's niche enough to base an entire channel around. With that said, I think the content that's being turned out, I think Ian does a great job. I've just actually been turned on to his channel by a family member. I was a little disappointed he didn't call me out at all on one of the channels that's up and coming. But hey, listen, you know, with less than 10,000 subscribers, I guess that's the measure of a man on YouTube, is how big your subscriber base is. So and thank you very much for the tip in the group, guys. You guys know, man, the financial compensation, man, is 100% voluntary in nature, but it certainly does go to help the message at all. And that's one of the things where I was getting the 1979 wood, and the beauty of this community, honestly, it's just great. The positive feedback really gives me the fuel to keep going. And it's always been one of my main focuses, on the success of the channel, in building the channel based on the backs of the subscribers who want to spend their time coming in and fostering a dialogue about finances. Why am I so aggressive on that? It's because that's my expectation of a channel. If I'm going to be on the receiving side consuming content, that's what I expect. All right. And I was turned off of some of the major channels because I would leave very detailed comments and I wouldn't even get a response at all. I've got more community traffic coming through. So I'm actually going to spend some time tomorrow getting back to everybody. You guys know I do the very best I can with detailed comments back to you guys. But thank you so much. That goes to help support the message, and get the message out there to you guys. My goal is to make 10,000 before Thanksgiving. That's going to be the goal here on the Independent Investor channel, and I will be absolutely humbled if we can get to that milestone. For some reason, I have that in my mind, to think that the Google algorithms kind of acknowledge a channel over 10,000 subscribers a little different than they do a channel under 10,000 subscribers. That's just my thought. Nobody knows, but I think it's going to be off to the races, man, and so be it, honestly. 10,000 folks, you know, coming in or have subscribed to the message over the last couple of years. That's all great. But I think some of those larger channels are actually really missing out, man. If I did this for a living, I'd do three uploads a day, honestly. Start putting your nose to the grindstone and really showing us how hard of a worker you are, because the opportunity is right there. It's right there. All right. And I just think it's so important to keep the focus on the fact that, yeah, you might have 100,000 subscribers, or you might have 200,000 or 300,000 subscribers. Honestly, there's so many people out there that need this information, guys. I don't look at 200,000 people and stop there. That's the size of a small town, okay? I'm looking at multi-millions needing this message. Multi-millions, all right? If you're going to go big or go the hell home, all right? Go the hell home, all right? And it seems like some of the larger channels are getting content. And that's the worst thing that can happen with somebody that at such a young age has bestowed so much success. And I talk to Scribner about this all the time, and I'm not trying to be condescending. Honestly, he doesn't have to take my advice, but I know he listens to me because I've been around the block a little bit, and I do not see that guy slowing down for anything, nor will I slow down. I see actually us doing the Independent Investor channel really for the rest of my life. I actually look at retiring. When I'm done with my service, I'll actually retire and keep this going. Maybe when I build an office someday, I'm going to build a YouTube studio and we're going to do this thing right. We're not going to do it from a living room, but hey, it's kind of cool to see the evolution of the process, man, when we started it some years ago, and to kind of acknowledge those milestones as they come. So it is a great group. I cannot ask for a better group. It's just awesome. I got a good friend of the channel. I got Doug Whitaker. I've got Officer Towers here, man. These guys have been with the channel for a while now, man. Officer Towers, I don't know. He came in the channel when I might have had 100 subscribers. It was in the very beginning. Very cool to win over your guys' loyalty, no doubt about it. I won't let you down. I won't, because I expect you guys to have the same expectation of me that I do of somebody that I'm sitting across from listening. And it's amazing. You know, you listen to folks now, and it's seemingly that anybody can say anything that they want nowadays. And if it's controversial or entertaining, right or wrong, that doesn't necessarily matter anymore. Nobody's really looking to seek the truth in anything. They're just looking to be somewhat entertained, all right? And I've kind of said from the beginning, look, I could probably use a little more charisma, all right? That's just not me, all right? And I will never, ever change for anybody on this channel. So let's kind of get down to it. I got Robert Lapointe, man, who's a good friend, actually. Hit me up with that email, please. I've been offering some pretty intense self-direct help, actually, for some folks, and they needed it. They needed the help, man. And I wanted to take it on. It was a personal challenge for me. And I know we've changed their life forever, man. There was no strings attached there, man. No money involved in that transaction. Probably valued, probably priceless value, honestly, but free of charge. Why did I do it? Because I could. All right. And I will continue to drive down my point until people start to notice. So, I mean, the obvious elephant in the room is Apple. I really didn't think it's that bad. Honestly, you guys need to understand my reason for keeping some shares long on Apple, and I will continue to do so. It is one of the most wonderful companies out there. It really is. Their services business alone is worth investing in the stock. And you know, I'm amazed at how hard we are on certain products, like an Apple product, which I can't believe. You know, I've had my iMac now for about 7 years, and it's worked the same as the day I plugged it in. And I can't say that I could say the same for the function and the performance of a PC. I've had them, you know, I have them at work. They drive us nuts every single day. Apple's got a phenomenal product, man. They've got they're sitting on killer cash. They've got amazing product line too. I might actually be looking to get an Apple Watch. I might treat myself. I don't know. We'll see. We'll see. I never buy anything for myself ever, but I'd actually like an Apple Watch. But they fell today, $16. I know I had a couple guys in the Facebook group hit me up and tell me that they looked at it as an entry into the stock, and I think you're probably a little bit premature on that. Unfortunately, I think they were looking for any excuse to beat the stock up. And some analysts are putting it down to 185 as a price target. I think that's fairly aggressive, but we'll kind of see what happens. I think if the China trade war does, because I don't really want to wait around until the G20 summit before they figure this thing out, because you know, you watch, the portfolios have been pretty violent all of October, and I would love the leaders to pull their heads out of their ass and make something happen. Actually, I don't really understand why they have to have dinner to strike up a deal. I really don't. Kind of surprised if the Chinese are not coming to the table. Why that's the case? Not really sure. But the great negotiator needs to take the bull by the horns and make some stuff happen. At the end of the day, that's all I really care about from our government is that it works for us. It's all I care about. All I care about. If things start to affect my bottom line, that's where I start to get a little bit cranky. So let me kind of scroll here, kind of pick up people too in love with Apple stock for it to be at this price for very long. According to historical matrices, you might be right, but unfortunately, I would say this about Apple: it's historically traded at a very recessed valuation, and now, you know, I guess you could say it's expensive at 18 times forward earnings. But geez Louise, for a $1 trillion company, I don't know. There are less names out there to get involved with, man. I'm taking a bath with Kraft Heinz food. Mondelez is killing it. They reported a great quarter. American Tower REIT, another one of my holdings that you guys know about, that had a killer quarter, ran up and gave most of it all back over the last couple days. So go figure. That's just the stock market for you. Very humbling place, man. Very humbling place. But I did get the run up in Estee Lauder that I was looking for. Took my 10% profit off of the table. So that was kind of cool, because I'm being very, very tight with my short positions, my growth positions, and certainly my long positions. Those aren't moving. And then my passive portfolio, I'm not even really looking at much at all, just letting it work.
letting it work. I certainly hope that there's everybody in the community has taken and heeded advice, man, to just kind of hit the pause button when volatility like this strikes up. You want to hit the pause button and just let it ride, man. You want to try to catch a falling knife, you can do that, but it's a dangerous proposition. And I look back over this month and I don't regret a thing. I don't regret just holding everything. That's just the way I feel. So let me scroll down here and kind of make sure I'm hitting these questions. Give me one moment, please. Robert Lapointe is asking, Ryan, are you familiar with Professor Scott Galloway? I'm not, but I will check into it. Thank you for that. Brent always gives me the first like. I've got Noella in the line. You know, I've got a lot of folks, man, who are tuning in from Canada. It's my second most watched country that tune into the Independent Investor channel. If they paid attention to my last name, they know it's French. So I don't know. Maybe I'm in with the Canucks. So that's a good thing. It's great to have you in the line. Very, very cool to have you in, man. Another just super loyal subscriber, man. It's so cool. It's so cool to have these connections with so many different people from around the world. I was commenting before the live feed came on, and somebody was offering to put me up in New Zealand. I said it was #1 on my bucket list, which it is. I'd love to travel there and check out both the North and South Islands someday. I met a guy from Auckland one time. He came and worked on our commercial fishing boat with us, and he was just the nicest guy ever. And he told me something that I'll always remember. He said, do what you got to do to get there. It's that beautiful of a place, and I can't wait to get there and see it someday if I have the means to do so. That'd be awesome. That'd be real awesome. Financial investor cues and such the viewers have, plus a little about the stock market this week. Yep, absolutely. Appreciate that. That is typically what I do. You know, these live feeds, they do strike up a pretty cool group. There's only about 75 of us on the live stream, but it's amazing how many people appreciate and tune into the message after it's uploaded to YouTube. And I just think it's one of those opportunities to see a different side of the channel creator. And I'm not an ego guy. I could care. I just don't. I'm not obnoxious. I'm not getting on here to entertain anybody. But I think a lot of people do appreciate seeing a different side of me, understanding that the YouTube message that I put out typically is very, very one way. I'm trying to deliver a piece of content and deliver the intent of that message. And I'm usually aiming for about 10 minutes at a time. So it's a little bit different. And, it's amazing to me if you're that good in your craft and you can talk about finances or art or whatever your niche is, why wouldn't you come onto YouTube and throw down with your community? I fear not. I enjoy the heck out of it. And talking about finances is something that I can do all day. Pretty awesome. John says October 2018, never forget. I concur. It was pretty wild. Pretty wild. Esteban in the house. Interesting. Can't wait to hear your opinion on the last round of earnings. I thought the last round of earnings were quite good, actually. That's my opinion. It's a mixed bag a little bit. Obviously, the tech names that were trading at such high valuations, and I'll start there. I've got Millennial Investing who's hit me up with the fantastic offering for me to kind of sink my teeth into a little bit as far as what I saw. I think companies like Amazon, Google, Facebook's in a little bit different camp with the trouble that they're going through. I think with the China trade war going on, I think the industrial sector is kind of taking a bath right now, undeservingly. I really do, because you've got companies like FedEx who are coming out and reporting fantastic numbers. I think some of the value in technology is a little bit tougher to find right now. You've got Intel who's really suffering, and I can't put my thumb on why it is. I'm long Intel. I've got a bigger position in Intel than I do in Apple right now. I do own Google. I do own Amazon. some of the higher growth names. You know, CRM Salesforce is another one of those growth names that I was happy with the quarter. I didn't think there was anything really to be overly concerned with. I didn't, unless I'm missing something. There were some signs of slight deterioration in the reports, but in a stock market like we've got now, those earnings are going to be scrutinized to a T. And if you don't deliver a perfect number, like Starbucks did, you're going to get punished. So Starbucks was about as perfect as you could possibly be this quarter, but you guys have to remember last quarter when Starbucks delivered earnings, they missed. So, you know, I mean, you win some and you lose some. I regret not taking a position in Starbucks this week. That was very, very high, if not the highest on the list. But I opted to go ahead and pick up BlackRock. I had FedEx on the list. I had Boeing. I mean, Boeing would have been the entry. I think Boeing took a haircut undeservingly. I really think so. And I think for long-term growth prospects on Boeing, I think they're projected to grow at 14.5% a year. And for a huge company like that, those are orders that are already put in for new airplanes. I think Boeing really is one of those cornerstones. Yeah, I mean, I could talk all day going through what it is that I was interested in the stock market. I didn't pulse too much into the utilities reports. Dow DuPont, I didn't get to look at that report, but Dow DuPont ran up $10 a share, sold up a little bit today. But Dow DuPont is a long holding of mine. Yeah, I thought overall for a third quarter, I thought it was quite good. You guys have to, I don't look at the third quarter like I do the fourth quarter. The fourth quarter, when I talk about moving into seasonality, I think if you sell the stock market exclusively, I think you're running a big, big risk of missing out. I do. Now, that doesn't mean that the S&P can't. I called the S&P running down to 2,300, and that was aggressive. I mean, there would have been some panic, no doubt, but it never really did that. And I'm actually concerned a little bit that it did not do that. I was actually hoping, I was saying, you know, if we're going to have a flush out, let's do it now. But now people are basically calling August or October a minor correction, you know, which is completely healthy within a bull market. So the verdict is out for me, really is. I'm not one of those guys that exclusively invests, so I have to trust the stock market, you know. I approach it in a strategic way. I have a pretty robust bond portfolio. I have a robust passive portfolio of index funds. I have a robust dividend portfolio, and I disclose all that through my channel, no doubt about it. There's no reason to be secretive about it, or I don't know, maybe I'll come out and start charging everybody $19 to go view my portfolio from here on out. It was a joke. Calm down. It's my dry humor. I'm just kidding. Everybody knows I released that stuff, but you know, the growth section of the portfolio, I mean, my top 5 growth stocks, I've got Amazon, CRM Salesforce, Adobe Systems, Google. I don't typically consider a growth name anymore, and I don't typically consider Facebook a high growth anymore either. I sold off NVIDIA, Netflix this year. I don't own either one of those two. So I'm happy. I'm happy. And if you've paid attention at all, it's hard to notice a stock like Amazon that's come back $175 off of its low of $1,500. I don't know if it quite got to 1,500, but it's approaching 1,700. So if you really want to test your wits, go ahead and buy some shares of Amazon. If you better like roller coasters, because owning that stock is a crazy ride. But in my particular opinion, it's a stock that you have to own. It really is. It's one of those that it's a paramount holding in my growth pillar in my portfolio, and it's one that I'm long on. It's one that I've always felt like I had to be a participant in. And that's just the way I look at it. So to answer your question, I was relatively happy with what I saw. That now, this is still 2018. I have even larger concerns for 2019. And we will be looking at those growth positions as close to Christmas or just shortly after Christmas, before the New Year's kicks over. and seeing if we can't take a little bit of defensive positioning on some of those growth names as well. So we'll see where we are. If I continue to be down in the positions, I will continue to hold those positions long. That's fine. But if I am given the opportunity to scale back come January 1, I will be doing just that in parts of the pillar. You have to understand when I say that, it got misconstrued a little bit. I put out a video for those folks out there with over $500,000 in assets. And a lot of people really appreciated that message. And it wasn't advocating for timing the market. It wasn't. What it was doing is allowing you to say, look, if I was 20 years old and now I'm 48 years old and I haven't changed my strategy at all, and I've accumulated some wealth in the stock market, because that's in fact what it does over time, it's imperative for you to use this opportunity to look at your portfolio and make sure that your upside potential and your downside risk is defined and that you are comfortable going forward with those two answers. All right. So, I just think so often people invest with a financial planner and they're going to tell you the exact same thing. If you took $500,000 into a financial planner right now, they would tell you the exact same thing. I'll take it all. The stock market just goes up over time, and it goes up all the time. And they're not really thinking about the fact that you might not have the risk tolerance to take a 30 or a 40% haircut on that $500,000 and wake up one morning and your $500,000 has turned into $325,000 and you can't sleep. That is not the reaction that I want for strategically entering into the stock market. Do it smart. All right. If you've got a $500,000, it doesn't mean that you have to drop it into the stock market all at once. And it's relative. I was really looking to address those people who may be overexposed a little bit to the stock market and maybe a little bit naive to the fact, and to strike up that conversation, to look at that amount and say, gosh, maybe scaling back just a little bit might be in order right now, because where's the stock market at, guys? We are not in a correction. We are not in a bear market. What we just went through in October was probably, and is looking like, to shape up like a healthy correction, all right? But we are not in a prolonged bear market, which if we were, I would say this is the time you want to make sure that you're about as max exposed to the stock market, not max exposed right now, all right? So each individual situation is relative, but I certainly wanted to strike up the discussion. And it was hard to delineate for me between, well, Ryan, you're advocating for timing the market. No, I'm not. I'm absolutely not. I'm asking you to define a luxury as an independent investor, in that you don't have to listen to somebody who may or may not have your best interest in mind. And I'm so sick and tired of seeing fiduciary bastardized across the financial landscape. Do you guys honestly think that there's people out there who have little wings sticking out of their back and they flap around when they're doing your financial plan, and they honestly have your best financial interest in mind, when in fact their job is to sell you product? Come on, come on. Strike up a little bit of free thinking a little bit, and understand that that may, or it may absolutely not be the case. And I tell you what, I've seen way too many examples to make me go, what? They did what? Why did they put you in 12 mutual funds? Do you need 12 mutual funds? I mean, really? I mean, the person just sat across the table and says, okay, yeah, 12's a nice number. You know, it's a dozen. Sure, I'll take a dozen mutual funds. Sure. And never ask the question how much that salesman, financial planner, made from recommending that particular line of program. Furthermore, when you come to the independent investor and you start talking about the products that we recommend, ETFs, low to no cost, which benefit the financial planner nil. That's why they don't recommend them, right? ETFs, single stock, which most financial planners that I know won't deal with single stock. It doesn't benefit them either, right? They'll charge you a huge entry fee, typically around $50, $30, $40, $50. I was paying $50 with Edward Jones to enter into stock and sell stock with Edward Jones in a managed situation. But a lot of people don't like the headache of putting somebody into single stock allocation when they may or may not have the risk tolerance to carry those single stocks for a long amount of time, and they have to pick up the phone, and be like, oh man, I think we should sell. I'm up 6%, and the financial planner's like, I just put you in the stock yesterday, So just a difference in objective, and it really kind of comes down to that. What are the objectives of the financial planners, and what are the objectives of an individual investor looking to direct connect to the stock market? I think you'll find that those two programs, you'll start to separate the gray matter into black and white. You really will. All right. Let me kind of cruise through here and kind of get to some of these. I've got Larry Massa in the line here. I'm looking to add a small cap value ETF. The big boys are getting their asses kicked. Yeah, they really are. And I'm a little underweight small caps. I'm looking at small caps right now. And also some international exposure. I think it would be unwise to not talk about some international exposure opportunities. And Japan is an obvious one. Japan's obvious. But the small cap is a great way of doing it. I'm not really looking to add a whole lot right here. I will be looking to strategically add some small cap exposure come the first of the new year, and probably some international exposure. I don't feel quite as comfortable as I would like to with some emerging market opportunity. I know where I'd want to invest. India is number one. I would want to invest in India, but I'm not really sure. I've got some really good friends of the channel who are actually from India, and they've given me some ideas, but I don't really feel quite as confident as I need to be in investing in the emerging markets as I should, unless somebody just came through and said, hey, no, this is it. This is where you want to be if you want to have exposure in India. But I think those are some of the most exciting. The United States is still, look, you cannot put the United States on the shelf as being a major player in wanting to have some of your portfolio exposed to the United States stock market. And there's a significantly deeper meaning to that as to why I feel that way. And it has a lot to do with the regulatory system that we have, in that when I feel like I buy a stock, honestly, when I buy Chinese stocks, it feels different. It feels like I don't have quite as much control over the stewardship of those stocks. Why do I feel that way? Because it's true. I don't. I own Alibaba, I own JD.com, and I own China Mobile. I own those three Chinese stocks, and I'm happy to own them. But owning China Mobile has been really quite the ride this year. It's been interesting. I'm actually happy to own the stock. I've actually become long the shares here, and I'm just raking in the fat dividend. It is the largest telecom service provider in the world by far, by far. I'm happy to own the stock. And I think anybody who picked up JD.com at $22 a share, that's just stupid silly. And then Alibaba, same thing. And if some sort of magic shakes out with the China-US trade war that's going on right now, skirmish, whatever you want to call it, those stocks are really going to catch fire if we get any type of hope of some sort of agreement on that that dispute right now. So I've got Brenny Felice. Hey, Ryan, can you please explain how bonds work and how much investors should allocate their money in them? I don't know how to buy bonds, or what bonds would be the best to buy. Would you suggest them? Geez, I can't suggest them right here. It's been good financial stewardship to have some bond exposure in your portfolio. I have right now just a little over 10% of my portfolio. All right. So about $20,000 of investable assets are owned in bonds. Okay. To be specific, there are corporate bonds and there are US Treasuries. Okay. Those are the two types. To get even more specific, there are long-term, medium-term, or intermediate term, and short-term. All right. So if you missed it, there's long-term,
short-term, and intermediate term, all right? You should have a spackling of all three, all right? My bond exposure is spread across 6 ETFs, and they're all Vanguard products that pay a very low fee. I understand that you can buy the bond straight out, and I am not the expert on bonds. There are some experts in my Facebook group who offer the bond direct link. And if you guys want that, certainly it's very easy to kick over to the Facebook group, because the Facebook group is really the conduit for all that good information on where you can go buy bonds direct. I didn't feel comfortable doing that, so I sought out my exposure through the Vanguard ETF products, which I'm happy with to an extent. I have done nothing but lose my ass on bonds for the last 3 months. The long-term yield has gone up significantly, which has really put a lot of pressure on bonds with the stock market at an all-time high. And if it starts going up again, yields are going to become compressed again, okay? And I'm afraid that I'm going to probably take even more of a haircut. Now, with that said, it's very interesting owning a bond portfolio. You're not subjected to that much volatility. But I can tell you, being a bond investor for the last 3 months, I've always wanted to have a particular section of my portfolio to try to kind of balance, because my risk tolerance is set at an aggressive pace, all right? So I'm 80-20, all right? You guys know I talk about this all the time. I'm not a moderate investor. I can't be a moderate investor, not with the amount of performance I want for my long-term financial goals, right? But the 10% that I do have devoted by bonds really is just a token starter position. If I had it to do over again, I would take more exposure on the short-term bond side and less exposure on the long-term bond side, all right? I did it the opposite, all right? And I just didn't know. And some of investing is like that. Some of it is experimental. Some of the lessons that you will pick up, you will never, ever be as knowledgeable before you bought an asset than you absolutely are after you've owned an asset for a while. But that's my spiel on bonds. And I don't even know if I could recommend bond exposure right here. With interest rates going up, I watch bonds, my bond portfolio, it goes down on an up day and it goes down on a down day. So I'm not really sure if I'm really justifying, you know, why it is that I even became a bond investor, you know. But I know it's the prudent thing and proper portfolio allocation to have some bond exposure in your portfolio. I just wish I could tell you it's the best thing since sliced bread. I'm down probably 5.5% in my longs, and I'm probably down about 3 or 4% in my shorts. So in my short positions. So just to give you an idea, it's not quite as volatile as stocks, where, you know, I'm still holding GE. I'm down 40% in General Electric. So watch, it'll come back, man. I'm going to do a video on it. Seen it before, seen it many, many times. So they did the right thing by cutting the dividend. I was happy that they did that. They should have done it 4 months ago. I don't need a 4% dividend on a company that wastes money like a sieve. They need to pull their head out of their ass, start becoming financially savvy again. So, but Larry Massler, the whole market seems to move in lockstep regardless of cap size. Yeah, I don't know about that. Small caps have been kind of taking a bath, but even before October. I just think you're getting a pretty good entry on the small caps right here. You could be right. You know, I think if you're paying attention to the stock market, you can certainly see that making money on a down day is difficult if you're going to take a position, you know, on a short-term basis. But yeah, I don't know. There's some relative strength in the stock market right now that I see. I think chips will start to come into favor again. NVIDIA obviously is showing signs of life. You got a brief buying opportunity in NVIDIA. You got a brief buying opportunity in Netflix. Netflix I won't own. I do own content creator Disney.
And if I were going to recommend a stock to you guys, I would look at Comcast that just came out off of a fantastic quarter. So, you know, NVIDIA, I would buy. Netflix, I already have too much growth exposure, in my opinion, so it wouldn't be a name that I would rush out there and buy. But if you did end up entering into Netflix over the last month, you did get a good entry point on Netflix. But I could say the same thing about Amazon as well. So I'm actually more excited about IBM. Once the dust settles on IBM, IBM is becoming quite the value. Still relatively expensive, to be honest with you, at 18 times. But the company makes a ton of money, guys. It really does. And I'm looking for that to pay off long term. Make a 5 3/4 dividend right now. I think it's over 5% dividend. They make a ton of different money across a lot of different businesses. Blockchain, obviously, acquiring Red Hat is a big deal for IBM. You know, artificial intelligence. The reason I bought IBM is for blockchain, actually. That's why I bought it. I had no idea that they were going to buy Red Hat, but okay, I should have bought Red Hat. It went up $70 a share that day, but I don't. We're long the position, and we've been taking kind of a haircut in it, but hopefully it bottoms right here at 115 as your entry point for IBM. It's the cheapest I've seen it for a while, and ironically, they've been doing so much repurposing of the business, going from legacy server to new cloud computing, that how is that? It's going to converge in those, you know, the 5 years that they've been working in the recalibration of the company. That's not being demonstrated right now in this low share price. The stock's getting beat up right now because the analysts thought that they paid too much for Red Hat. So go figure. I'm happy to own the stock. It's a great investment for me. Great investment. Got Financial Investor. I mean, you start in weekly, February, March, October. We're all -5. I got Jesus. Good evening, Ryan from South Texas tuning in. Awesome. Used to live there. Awesome. Good to have you. The October midterm elections are always a bit rougher. I think 2014 was the last midterm election. Yeah, I just, you know, I got Brent is sharp, man. If you got some sort of political or geopolitical ripple in the stock market, for a lack of better terms, the stock market is cranky. The stock market does not like uncertainty. If there's something that I can pull out of the stock market from the last kind of 25 years of observing the stock market and how it reacts to certain things, you know, Brexit, the financial crisis, the .com era, you know, I've lived through all those. And it does not like uncertainty. So, you know, it's just one of those things that I would rather it be behind us and we know exactly where we're at. I've had a few folks hit me up and tell me I'm wrong on that. You know, it has nothing to do with the stock market. I would come back and say that everything has everything to do with the stock market at all times, no doubt, or that they'll make it part of the stock market. Absolutely does impact, you know, kind of where we go forward and what's been done over the last couple of years in the agenda. What are you doing with your IBM position? I'm holding it. I've got Ryan Calhoun, who's hitting me up with an interest on what I'm doing with my 50 shares of IBM. I'd be half tempted to plus up again. In hindsight, I should have scaled into the position. I thought I was getting a fantastic entry at 130. I knew I was paying up for valuation. You have to understand too, Ryan, I've owned IBM many, many times in the past. All right, so this $15 per share haircut that I've taken, it's on house money, okay? So think about what I'm saying, guys. You know, as you get more time in the market, you kind of understand where and how you've entered into positions. And at 130 for IBM, you know, I've been kind of covering, that's a stock I kind of cover. I'm very interested in it. You know, it's one of those, it's an investable company. It's been around for so long. It was a little behind the curve in its transition to new tech as opposed to old tech. I'm happy to own the stock, no doubt. Dividend aristocrat. And at 115, I mean, it showed some signs of life yesterday. I thought we had got the bottom at 115. surprised to see it come back a little bit. But, you know, the idea behind overpaying for a company like Red Hat, which makes them the dominant player in it's the complex cloud that they're into now, which they're a dominant player in that market. The cloud is kind of split up into two different categories. There's the complex and there's the simple. This is the complex cloud. This is what Red Hat was so good at. That's why they went after them. So if they overpaid for them, so be it. There's nothing that time can't solve on IBM's behalf, because their legacy businesses, IBM is a money machine. Like they make money hand over fist, man. So if I've got to wait it out, I see the stock going back to 130 with no problem. I actually see it. I actually see it flirting with $200 in an investable future, you know, and I'm willing to actually go long those shares until that happens. Thank you for the question. I'm holding the position. That's easy. That's an easy one. I would never sell down right here. Never. No way. I'm going to take a rake in that dividend, man. I'm almost enjoying owning a stock like IBM with some capital appreciation potential, as opposed to owning my bond portfolio. Honestly, I could take a stock into a downturn, but this bond portfolio, this is crazy. It's interesting. I don't even know if I would even advise it right now, which I'm not. I'm not supposed to do that. You know, I'm supposed to kind of tell you, hey, look, having some bond exposure is good. But honestly, I've always looked at big blue chip companies and said, why don't I just own the blue chip company instead? Why don't I just pick up IBM right here at $30? You know. I mean, they've had 2 monster acquisitions and nobody talks about them anymore, you know. Wait till those start to siphon out and make some money for them, Time Warner and DirecTV. So, you know, go figure. Sometimes it might be just better to own the underlying stock than it would be to just try to piece out a bond portfolio for some stability in a portfolio. But, you know, who's to say? I'm holding IBM. Thank you for that. Dems are going to take the house. Yes, they are. I agree. Dems are going to take the house. Thank you, Obstinate One. Go grab another microbrew. Dems are going to take the house. Yes, I think that's what's going to happen. I think that is what is going to happen. And I just had my deal jump on me here a little bit. And I'm going to scroll up here and see if I can't get, I don't know why this does this. I lose my place. So I've got Lydia Santiago running the bottom side of my discussion here, so that helps me out a ton. So hopefully I can find my place here and see where I was. So I apologize for this. We'll definitely buy it if it goes under 1,000. I'd like to know if you guys are talking about IBM. That'd be quite the. Oh, you guys are talking about pot stocks. That's awesome. You guys are braver than me, no doubt. I wish you all the best with that. I would be very careful. I really would. So IBM doesn't know what they're doing. I know what AbbVie is doing at least. Okay. Lydia says, yeah, okay, you guys are having a discussion there. That's awesome. I'm just the facilitator of the discussion, so no big deal. You guys talk it through. That jumped big time at me. I thought I was at the bottom of the script. Ryan, I'm really only long a few names like FedEx. Perfect. Because shipping and the rise of commerce, I just can't see it going away. It won't. FedEx is phenomenal. FedEx was in my top. That's why it was one of my top 5 picks. I don't offer those 5 picks for nothing. I don't. I mean, I'll let you guys know I'm thinking about positions all the time. You know, CVS is one of them right now. You know, who the hell's talking about CVS right here, you know, on YouTube? It's as if people think that the same 10 stocks exist on the landscape when in fact there are thousands of stocks to buy. I think Home Depot is a good deal here. I do. I like Boeing. I really do. I'm talking with Officer Towers right now. He's talking about FedEx, and I probably should have taken that position. I like Caterpillar here. I've always liked John Deere, no doubt. Industrials is one of my favorite sectors, if you can't tell, because industrials has the major sector, and then you've got the subsector in defense. I do own Northrop Grumman. I think Lockheed Martin is a buy. You know, all those fantastic companies. Raytheon is a buy. I mean, those are just solid companies. And I enjoy investing in industrials. It's really one of my favorites. I love tech. That's my number one. I do love energy. Utilities is something that I do invest in to get that stability and the dividend. But you know, I've got my favorites, no doubt. I like a little bit about each sector. Financials, obviously. You know, my biggest position that I picked up this week was in financials, my 5th financial position. I might as well just buy Bank of America and I'll own them all. You know, I've got Citigroup, Wells Fargo, Blackstone Group, BlackRock, JP Morgan Chase. I mean, Jesus Christ, what else do I need? Bank of America is it, and then I'll own the top. I'll own them all. Might as well just buy Morgan Stanley and what's the other one? Goldman Sachs. Then I'll own them all. But I'm not going to own them all. Try to aim for that 15% in financials, and that's it. But I had to buy BlackRock right here. It was just way too oversold. So I want a pair of HomePod speakers. Nice. I jumped on Apple last night. Andrew Trapman. You could be right on that. Honestly, I didn't think it was a bad quarter at all. I think Apple's firing on all cylinders. It's a company you might as well just pick your poison, because you're not going to get very many entry points into Apple. When was the last time you can think of a good entry point? You know, it's a tough one to buy on the dip because it doesn't stay here very long. It really doesn't. And Apple's one of those stocks that I contend that you can buy and own forever. I think every savvy independent investor out there should have a piece of Apple in their portfolio, man. You don't have to get crazy. You know, you don't have to buy it, you know, and make it completely overweight in your portfolio. But it absolutely, you should have some exposure in Apple. They're just they are a diverse company, and the services business is what makes them so diverse and interesting. Second is the amount of cash that they have. And I want to be invested in the company when they actually look to put that capital to work. I think they should be doing it now. That's just my opinion, but I'm going to defer to Apple as to knowing what they're doing when the drinks come out next fall. Lydia says AbbVie will be increasing their dividend again. Wow, they already pay a fat dividend next February and has an average dividend growth of 140% a year. Jesus. They also are becoming more diversified about their meds. AbbVie would be kind of right behind some of my other healthcare names that I've got. You guys know that I've got Medtronic, I've got J&J, I've got Pfizer and Merck. AbbVie would probably be up there in that discussion as well. And Eli Lilly, it deserves a top 5 discussion as well. And, you know, I like to see that we're spending our time talking about the best of the best, honestly. But those 6 stocks right there, there's a bunch more. Healthcare is really a cool sector to invest in. I've really liked many other in the healthcare sector. Some really good money made in healthcare over the years for me. I've enjoyed investing in it. Johnson & Johnson probably haven't done quite as well as I'd like. It's one of those stocks that I own and I keep it forever because I see it going up long term. So I want to make sure that I'm investing my time in J&J and not missing out on any type of opportunity. So IBM has a great dividend as well. Hector Mendoza, it does. It's over 5%. They're a show me story. I mean, guys, we can talk about the stock market all day. Okay. I'm not one of those guys that tells you, hell, I'm right, do what I say, and therefore you will be anointed. It doesn't work that way. It doesn't. You know, I could be completely ass wrong, and IBM could be below 100. You know, do I think that's going to happen? No, I don't. That's my opinion. That's why we generate these conversations. You know, I was certainly willing to put my money where my mouth is and invest $6,000, $7,000 in the stock. You know. So I obviously think that there's something there worth investing in. You know, if you think I'm wrong, go invest in GoPro. It'll do you well. All right. They had a wonderful quarter this time around, and nobody's bringing it up in the group here. GoPro just had a barn burner of a session again. They're shocking the world. It's too bad too because I really like their products. Their software sucks. Their editing software sucks, but their product is actually pretty cool. It's actually too bad. I actually think GoPro someday will actually be a pretty awesome company when they're overtaken by somebody. Somebody's going to buy them. So, yeah, just buy AVG, and if it goes down, collect the dividend. the Precious Split Company, ABT, paid dividends for a long 20 years. AbbVie should do well. Far wouldn't worry about lawsuits. Google, Wells Fargo, all sued. God, no kidding. That's the biggest headwind, I think, for Google. Wells Fargo hopefully is getting over that specific scandal. With the account scandal, I would say that Wells Fargo, that affected their accounts business, and that's not really a huge part of their business. Huge part of their business is the business that you don't hear about all that often. Certainly you're going to hear about people getting sold 7 accounts, and they didn't need 7 accounts. You're going to hear about that. But their corporate lending is where their business at. Wells Fargo, man, they're a beast. They're a big, big company. They've done well over the years in that regard. That business hasn't changed a bit. So once the thing blows over, Wells Fargo is going to be one of those that you're going to want to own. Fat dividend, good financial exposure. So let me kind of scroll here. IBM doesn't know what they're doing, at least. They are a lot of stocks, want to publish in a position, and however, most of them are too expensive right now. Depends on what sector you're talking about. I do think there's some value. I've given you some this evening. Comcast is one of those that's a good value right here. Hey, Ryan, do you follow Starbucks? One of my best performers this month. Hey, I missed it. I've made money with Starbucks before, and I don't currently own it. It was one of my top 5 picks in this month's video, and that was one of them that I offered as a. I ended up going with BlackRock instead, which I made money on. I ended up picking up some more shares. I entered back into McDonald's, actually. What else did I do? I did one other thing. I can't remember. Oh, Eli Lilly. That was the short I took. This. It was between Eli Lilly and Starbucks, which were both on my top 5 picks this week. That I put out. I'm starting to do top 5 picks every week because, quite frankly, that's what it takes to really demonstrate what it is I'm actually looking at. I'm not doing it for any other reason. They're popular videos. They really are. I'm not going to lie. They're popular, but I just feel like a lot of people put out top 5 videos to watch, or top 5 videos or top 5 stocks that exist. I don't get it. But I'm not really sure what value there is in that. But yeah, anyway, I think Starbucks is awesome. I think it's awesome. Largest coffee maker in the world. They're the biggest. They're growing huge, and that's why they beat on their numbers this time, man. China, it's all about China as well with Starbucks. Their growth was on fire. If I'm not mistaken, there was a partnership with Alibaba. Is that correct? Yeah, that's scary cool. So yeah, Starbucks is a strong buy. I would hold that. Don't sell it. You got a great entry point. If you entered into the stock in the mid 50s or low 50s, I think you'll do just fine with that. I'd get long it right here. I really would. I really would. I wouldn't add more to this position, running up 5-6% like it did after earnings, but hold it long. That's for sure. You got a good entry on that stock, no doubt. Some Aussie stocks pay a great dividend. BHP, Rio Tinto, you bet. Yep. Westpac Bank, you bet. I've got Andrew Trapman in the line. G'day, mate. What are you doing up right now? You crazy? maybe you're so far on the other side of the world, man, that the time zone works for you. So it's really good to see you, man. Very cool. Lydia had it. So you guys are talking there. PZZA stock is a great buy. I'm up 30%. That's awesome. Nice work on that. Hopefully that stock is housed in a self-directed Roth IRA, tax protected. So you could take profits at any time without having to be subjected to tax. So that's cool. David Strout, looking to open a Roth and would like to know who with help, please. I got David Strout. Very good question. I'm going to throw out just my top offerings. A lot of guys in the group here, I know Lydia, I know Brent, do M1 Finance, okay? It is worth checking out if you're a new investor. They offer retirement accounts. They're going to offer you free trades, all right? And if you're listening to me, all right, I want to make sure that I'm holistic with my advice, okay? M1 is a fairly new platform, okay? It's very good. I've used it. I recommend it to new investors. It can get you done, okay? If
that doesn't suit your needs, you really should or could look at some of the major brokerage houses: TD Ameritrade, Fidelity, Charles Schwab. I'm not sure if T. Rowe Price offers one or not. I'm not sure. If Brent does know and he's listening to me right now, I go with Merrill Edge, Bank of America. I know Brent also does business with Merrill Edge, Bank of America. Now, I'm offering you all brokers that offer a self-directed option, okay? If you don't know anything about investing whatsoever, I would stick with any of the channels that are in the group here. We'll kind of teach you a little bit, and I want you to really understand and be informed about your decision before you go in and you start yourself on a self-directed program. I will tell you this: it's a lot easier than a lot of people give credit for. Don't scare yourself off of the topic. For a lot of people, they look at it and say, wow, I can buy single stock in my Roth IRA account and I can let them ride for the rest of my life, or I can buy passive ETFs or index funds. Yes, you can. Okay, so there's a lot of answers that you could seek out, all right, in the meantime, to get yourself on the right foot. My program advocates for eliminating or drastically reducing fees within a retirement account. And over the years, 30, 40 years, that can make the difference between hundreds of thousands of dollars. I will say this again. This is where the niche of my channel picks up, all right? If you invest in a managed situation, your full potential on your money will not be realized because they will be consumed by fees. That 8% rate of return that you're looking to get on average year after year will turn into 5%. Industry average is 3% of fees within those accounts. So why not just do the hell away with it, okay? Put yourself on an even playing field. And if you've got 30 or 40 years, maybe even 20 years of a time horizon, you want to make sure that you're putting your money to work unobstructed to work for you over time. You don't need to subject your money to work not only for you, but a financial planning office that has multiple millions of other people working for them, just like a bunch of lemmings, okay? Be an independent investor. Direct connect yourself with the stock market. You'll be glad and you'll remember the day that you came across the Independent Investor channel. I know Brent advocates as well for independent investing as well, and I'm glad. I mean, it's just one other voice out there in a sea of confusion trying to help share the message out there. But I've given you a lot of brokers to start with. I know Ally offers. I know JP Morgan Chase Bank offers a self-directed program. So you could get started with any one of those offers. So David, thank you for that question. I hope we gave you some value there. If not, just throw it back in there and catch me before I lose my voice. So we're going to continue on here, man. Don't get scared. Some companies always get sued. Yeah, no doubt. David, TD Ameritrade is the best brokerage house on earth. I've had multiple accounts and loved them. So that right there, I take that information and I'm kind of offering those recommendations third party because I don't use TD Ameritrade, but I've heard nothing but good about that platform. Nothing but good. I've never had somebody come back and tell me anything negative about it. So I don't mind turning that back to the group for you guys. I will give IMB a chance and see what happens. I might make $70 a share. Nice work, Hector. I love it, man. Thank you, Obstinate One. Hey, what about me? I didn't help you at all? I think I jumped in the conversation and I didn't get to your question quick enough, man. So very cool stuff. Lydia, I'd like low risk and high reward if I can obtain it. Absolutely. Really kind of scanning through here, making sure I don't miss any of these questions this week. It's difficult to facilitate and talk at the same time for an hour straight, but I do the best job that I can for you guys. AbbVie Dividend Aristocrat, proud of it. I think the dividend will keep going up. That's awesome. I may look at adding a fourth name to the portfolio, actually. Pretty cool. I've got AVA, Financial Investor. Thank you. I've been wanting to add a good dividend-paying industrial to my portfolio, and it seems like the time to start. Cheers. I think there's a lot out there to look at in the industrial sector, no doubt about it. I just think financials are so undervalued right now. I mean, hell, it's almost as if they're never going to go up. They've been doing this for the last 10 years. But, you know, the contrarian in me says that you need to have at least some financials in the portfolio
to go to work for you. These recessed valuations are not going to last forever, in my opinion. All right. All chip stocks are suffering right now, not NVIDIA. NVIDIA is not suffering. And I think Intel took a really interesting downturn after what has been a couple really good quarters. Honestly, I think you're getting a pretty good entry on Intel right here. I'm proud to be long the stock. I'm fine with it. So I got K97 in here. It seems like money is just starting to leave Canadian cannabis names and heading to American ones in anticipation of a farm bill and legalization sooner than later. Check out Liberty Health Sciences. Right on, man. Very cool. Appreciate that offering for the group. I've got Hector Mendoza, true, that picking up 12 shares of Cypress Semiconductors. Awesome. Like that name. That's really good. The chips are volatile right now, man. So just kind of be careful. NVIDIA being the best in breed there with the chip makers. So semis is probably the industry I know the most about from my background in IT, and I personally think Intel is undervalued right now. That's what I saw. It's kind of a best in breed. Honestly, you're not taking or seeking out the higher than average growth in NVIDIA. I like NVIDIA a lot. I like the industry. I like the CEO. I like how they run their company. It's awesome. I consider NVIDIA to be best in breed. I know AMD was supposed to give Intel some run for their money on the competitive side of the house, and that really never ended up being materialized at all. But yeah, I mean, I've got 100 shares of Intel right here. Whatever. I'm going to continue to rake in the dividend. I didn't get the best buy point on it. I think I'm about down close to 10%, I think, in Intel. Not the end of the world here. The high 40s, low 50s. What's the difference, honestly? But I do. It was really my top pick this week. I already owned it when I pushed it out there for the group in my top 5 this week. But yeah, anybody who got an entry into Intel, I think you're doing okay here with this entry. I think you'd be just fine. Intel's doing just fine. I've got Andrew. I love Boeing. I agree. I've got Ernest here in the group, man. Good friend of the channel. Clicking the like button as a stroll in. Yeah, you're hardly a stroll in, brother. Come on, man. I love you, man. You're my brother from another mother. I love it. However, there is 75 people in the group, and I typically look up at some point during the live stream and wonder how I have 75 people in here striking up a conversation about stock market. And before I typically get to the end of my comment, the thumbs up usually starts to go up, because evidently that's a free way to support the channel. I'll wait. Just kidding. Strike the like button if you feel so inclined, man. I could care less. I'm just kidding. But last week I did that and it went ding, 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 ding. Pretty cool. Anyway, really cool live stream tonight, man. I appreciate you guys. There it is. See, I told you. It's awesome, man. I appreciate the love, man. I enjoy the heck out of this. But for you guys, you know, like David, when you come in and drop a question like that, you got to understand, man, that's coming from a lot of different summaries of opinions. And, you know, I've used Merrill Edge now for about 10 years. So it's very, very important that you understand that those opinions are coming from a lot of different users in the community, and that it's a great community, man. It really is. And I hope I've got millennial investing in here, man. I hope you've enjoyed your time as well. You know, we've done this kind of as a roll up our sleeves a little bit every Friday. There's not a lot of it going on YouTube, to be honest with you, especially in the financial landscape. I don't know if they're afraid of saying something that they don't mean, but it's certainly one of my favorite conversations to have, and it's a lot of fun. I have a lot of fun, provide some visibility with what we're trying to put through in the message in the channel to try to help new investors and existing investors, no doubt about it. It's a topic that I feel like gets brushed under the rug all too often. I think that's unfortunate. I think we need to be striking up a dialogue. You know, as busy as we are in our lives, I think finances is not one of those things that we have the luxury of just ignoring our entire life. I think that can be very, very problematic over a lifetime. So When does Starbucks get into the pot drinks? They're from Seattle, man. Have you guys ever been to the Real Pike place? I have. Absolutely, man. Come on, you know how they roll up there in the Northwest. Jeez Louise. Come on, guys. Probably sooner than later to answer your question, Mr. Doug. Definitely. Stock will probably double after if they start mentioning that type of discussion, it's really going to take off. And then millennial investing is going to be like, man, I remember that time I asked about Starbucks on the Independent Investor channel. It's making me rich. Good stuff, man. I got D Jones. I think we will look back at this volatility as an opportunity to enter average into positions after all this trade war and FOMO. These opportunities rarely present themselves. There's a lot of think tanks that think along that line. I'm one of them. And I paid attention enough today where I thought we were kind of shown a hand a little bit. I think if Trump wasn't actually just, tweeting out of his backside, or offering comment out of his backside, I think he was trying to be overly optimistic, but I actually think he's going to get this thing done. I do. And there's no better negotiator that I'd rather send out to represent the United States in an operation like this. I mean, who the hell else would you recommend? Come on, So let's see what can happen. I mean, look at the Chinese economy. This needed to be done. And in hindsight, this could have been the most opportune time to pull a maneuver like this in the history of our country. We really haven't suffered that much at all, and we were due for a correction. So, I think the timing of it was quite good, but I don't think they're going to keep this thing as a prolonged trade war. I don't. And I think Trump looks at it this way. I think Trump looks at it like, look, we're going to rake in a bunch of fat tariffs in the meantime until they pull their head out of their ass and start looking at some of the things that they do and start looking at proposing some of those changes. And I'm talking about intellectual property theft, guys. They make us voluntarily surrender some of our prized secrets in our technology, man. It's not right. It's not right at all. They don't do that. We don't expect that of them. So, I think we're looking for something a little bit more fair, and it'll be interesting to see how it does shake out. Yeah, thank you for that comment. I think you're right. I think moving into seasonality, I think moving into a new month typically shouldn't have anything to do with anything. But all too often it does when we start moving into the holiday season. And perhaps maybe putting this stuff behind us. I think it'll be really, really important. So Lydia is being responded to there by Obstinate One, who offered up his stock picks. That's pretty awesome, actually, because they're all good. Caterpillar, 3M, J&J, Cummins. I can't make up my mind. Out of those three, well, you've got industrials and healthcare mixed in. I really, really like John Deere as well, so you could throw that in the mix. I like Daimler. You guys know I'm a Detroit diesel guy. So Daimler Chrysler, that owns a small division of what's manufacturing the greatest diesel engine in the world, which is the Detroit diesel, could probably be thrown into that discussion. But as far as a best out of those stocks, J&J, no doubt about it. But you could pick one out of those two, J&J in the healthcare sector, and throw AbbVie, since that seems to be a pick of the night there in that group. And then Caterpillar here on the dip. 3M did not have a good quarter. So I own 10 shares of 3M right now, and 3M did not have a good quarter. I'd rather own Caterpillar right here. And then Cummins is just a fantastic company as well. That's just my quick rundown of those. Boeing new plane crash caused them problems. Wow, that's interesting. J&J is always good regardless of the market. I agree. Yes, I got the financial investor again. Thank you. Doug laughs out loud. That's awesome. It was probably at me because I'm such a funny guy. Funny. David, if you call and ask TD to lower your commissions, they usually will. Their customer service is impeccable. That's really, really a good point for the group here, guys. You need to understand that you need to be a little bit more, not you guys, but people in general, I find all the time are a little bit deficient in taking charge and command over their accounts. look, they're going to try to win your business. But if you allow yourself to be kind of herded in one direction and not ask scary questions, in that, how much fees do you charge? You know, what type of incentive thresholds do you have? What is a self-directed account? Hell, ask them. You know what I mean? Ask them if they have that type of, you know, service. So ask those questions and make sure that you're satisfied with the answers that you're getting. At the end of the day, it's your money, not theirs. All right. So you want to be very, very careful with that. So 1979 Wood, I'm good. Thanks for asking. Lydia is running the end of this conversation for me, which is fantastic. I have Amazon. I'm up 40%. I love Amazon. It's an interesting stock to own. It's very volatile, no doubt about it. But yeah, it's one of those companies that you got to be involved in. I like eBay right here. There you go. I mean, there's another WAG that nobody talks about on YouTube. You know, if you're going to buy JD.com, why don't you buy eBay? They ultimately run the same business. Those two kind of get, and Alibaba as well. Alibaba is a little more like eBay, actually. If you watch Scribner's breakdown, he does a fantastic job of talking about kind of the misconception Alibaba's talked about all the time as being the Chinese Amazon, and that's not really true. That's not the way of it. JD.com but yeah, eBay looks really good. They had a nice quarter this time around. Has anyone read Ray Dalio's new book? Nice. That's awesome. I love seeing that stuff in the group here, man, where you're offering those good pieces of literature to read. That's awesome. Thank you for that. Still recommend Daily Dollar. Averaging on M1 Finance, no better way to average in. Yeah, it's awesome. And it's free of charge, man. How can you argue with that? It's a killer service. You guys have to understand, man, I'm going to give you a perspective from the old school, man. We never had any of that stuff when I was your guys' age. And I say some of your guys' age, man. Some of you guys are half my age. So enjoy it, okay? You're given all the benefits that we never had. We had to buy paper stock when I was trading. Yeah, no, I'm just kidding. So it was never that bad. Look, guys, I'm gonna kind of start to wrap it up. I'm getting to the end of this. Awesome. Just appreciate the heck out of your guys' time. It was an awesome discussion. I'm going to save the agenda that I had for next time. It was extremely robust, but I ended up focusing on the group more tonight than kind of trying to bounce back and forth a little bit. 72 watching the stream, but only 12 likes. Come on. Come on. Yeah, I know. I already called it out one time, and I think I got like maybe 5 more thumbs up out of the deal. 5 more, and it's like free of charge. I think maybe if I charged $1 per thumbs up, then people would be more inclined to come in here and hit the thumbs up. But no, I'm just kidding. I don't care. I just appreciate the heck out of your guys' time, to be real about it. Very cool. I just appreciate you guys coming on here. I've got Ernesto Alvarez, long-standing man in the group. Jesus, you've been with me since I had like 3 subscribers. I just appreciate you, man. Salesman, sorry, financial planner. Yeah, I mean, that's kind of it, man. Sorry. I mean, that's part of the reality nowadays, and the landscape is definitely changing. So I would just wish for people to be really, really educated on their multitude of options, where I think a lot of people, unfortunately, think they're limited in options, and that's just not the truth. It's not. They need to understand the ins and outs of this option of kind of going on their own, and actually the prospects of doing so. It's very, very important, man. Very cool. We got Miles Jenkins. To your point of financial advisors, Google the Southern District of New York and see how financial advisors the government is prosecuting. Holy moly. Oh my goodness. I'm pretty certain you're in my Facebook group. You need to post that in there, please, because that is right along the nerve of my channel. Sorry. Part of it is intuition. A lot of it is personal experience. And a lot of it is validation from person to person to person after person who has dealt with and has had very, very bad interactions with. So I would want to take a read on that. So if you can get that in the Facebook group somehow, some way, please. If you're a millennial, I'm sure you'll have no problem, Miles. But if you're my age or whatever, man, just get that in the group. I'd love to take a round turn on it when I get a chance. I would love to read that because I know that stuff's going on. I think it's going on in the realtor world as well, but that's a whole nother problem to tackle at another time. When the independent real estate investor comes out, I guess. I don't know. We'll see. But anyway, let me try to get to the end of this here. Buy when stocks get slammed and oversold and you will thrive. Good evening. Got Alibaba at 190 and Micron at 52. Suggestions? Oh, hold them. Hold or accepting the loss and get something like Amazon. No way. No way. Those are two fantastic companies. Hold them. You got just kind of sucked into Alibaba at 190. I think you're fine. I've got Said Dianat, I believe, 190. You hold Alibaba. If you wanted to average down here, you could do that. I don't think you're getting quite as interesting of an entry point. But if nothing else, man, on a high growth name like Alibaba, which isn't as bad as Amazon, to be honest with you, it actually has a more attractive price to earnings multiple in Alibaba. But here at 130, 140, it's obviously more attractive than 190. You know that. But if you did have the means, you definitely want to at least hold those shares. And if you could even pick up a few more shares, you could absolutely do that. When the China-US trade war does shake out, those stocks are going to take off. All right. GE and Ford are screwed, Hector. Yeah, I know. Thank you for rubbing that in. I appreciate that. Have another microbrew. All right. I appreciate it. So Millennial Ray Dalio had an interview talking about how EM and gold offer the best risk reward over the next few years. That could be right. I agree on the emerging market side. I don't typically look at gold as an investable or an investment asset. I look at it as a hedge. I've always looked at gold as a hedge. You know, if you're going to buy gold to buy low and sell high, like you do for an investment per se, and even an investment, if you buy low and you sell high later on down the line with capital appreciation, I just typically don't look at gold that way. I don't. I think gold needs to be bought and kept forever. And I think silver is a better buy right here anyway, but both of those precious metals, in my opinion, I consider them a hedge. And I think no more than 5% of your portfolio can work with those hedges. But honestly, I'm interested in both of those, but I look at both of them from a collector's perspective, you know, in that I like coinage, I like junk silver, I like jewelry. There's a reason why I like jewelry. I like the transferability from other countries. All right. I've learned all this stuff from reading, you know, so you got to kind of think about the forms of gold and silver that you may potentially want to own over your life. But yeah, I look at acquiring that stuff and just keeping it long term, keeping it forever. I got 9 shares of Alibaba at 133. How do you do that, Hector? Dang, that's a heck of an entry point on Alibaba. Nice work. That's awesome. Small cap value ETF from Vanguard is up today. Yeah, small caps outperformed today. They did quite well. I'm going to cruise down. I got Bob right here for those with Schwab. They have some good ETFs that are commission free and as low as 0.03 management fees. It's an expense ratio. I have some VOO, but will not be adding to it due to the commissions and higher fee. It's not that much higher. I mean, it's a 100th of a basis point. So we talk nothing but low fee investment products. Why? Because why not? Why would you choose a higher investment product? And in a lot of cases, especially in the mutual fund world, you're actually going to pay more for lesser of a product. That's just a fact. So you might as well look at those ETFs that track the benchmark, man, as your passive pillar. So guys, an hour and a half work in the business here. Ryan, check out some of the small caps I mentioned at the beginning. A couple more are Accenture and Proto Labs. I will do that. That is awesome. Appreciate that offering. That's way cool. Started investing a lot. Invest in vanadium stocks. Vanadium stocks, nice. Larry Massa, bonds, long-term inflation protected securities. Excellent. The only bond I trust right now is James Bond. Absolutely. Shaken, not stirred. Very good. I love it. I appreciate that. That's very cool. The James Bond. Not me. I'm Ryan. So, guys, I'm going to try to get to the end. I've got Mohammed Rahman in the bed. This is a good time to buy more shares since stock started moving up. It could be. Just be kind of careful. Okay, I gave you my opinion at the very top of the show. I think the verdict is out as far as I'm concerned. I've said from the beginning that I thought this was going to be a short-term correction. I just think there's too much positive, and we're not anywhere near a recession. We're not in a bear market. We are in fact in a bull market. And until we are out of a bull market, we will still continue to enjoy a bull market. And that's just the way it's been. That's the way it always will be, and that's the way that it is now. All right. Bonds suck. I'd rather own dividend stocks where the share price can increase while getting paid a yield. That's the way I feel. I personally like SIN dividend payers over bonds right now. You bet. Altria, Philip Morris. I did sell out of my position last week, actually, in Philip Morris. I was up significantly and decided to take some profit off the table here. But I do agree with you. The SIN stocks are the way to go. I think Philip Morris still actually has a very attractive entry here in the high 80s. If it didn't close close to 90 today, I didn't track it through the end of the day, but yeah, the high 80s for Philip Morris. I mean, that stock was 117 just a few months ago. So pretty good entry. Good evening, Ryan. Learned a bit. Thank you. You are welcome. Norman, thanks for coming in the group. I appreciate it. Bill, thanks for coming in. Guys, I'm going to sign off now, man, to the channel creators. I do want to thank you guys again for coming in, helping facilitate the discussion. There's too many questions for me to deal with all at the same time. I try to deal with as many as I can, but I really want to acknowledge, I appreciate you guys helping me foster the dialogue, getting a little bit more savvy on where we are in stock positions, facing a new week here in November, moving into seasonality. Certainly want to thank Millennial Investing again. A newer channel. I assume I have not kicked over to your channel yet. So if you've got 3 million subscribers, I apologize. I don't mean to be condescending, but anybody in the group who hasn't checked out Millennial Investing channel, certainly kick over there, help support and thank him for his time. I really appreciate it. Very cool. With that said, guys, I will be signing off and enjoy the rest of my weekend here. You guys do the same, and I will see you next Friday. Take it easy.